Again, live from Rye, New York. Danny Cherrod here with you today. And I have Sandrine Montsma with us, a managing partner at Bridges from Israel. So good
Hi,
afternoon, right?
yes, hi everyone.
What
Hi
time is it
Danny.
in Israel now?
It's 6 p.m., 6 p.m. in Israel now.
Got it.
But as you can see, very sunny still.
I see that. And couple of words about you before we'll start this conversation. Um, Sandrine is co-founder of Bridges that she co-founded in 2018 alongside Gal Hayut and Ron Grodecki. It's an impact investment fund investing in Israeli companies with the potential to generate high impact and competitive financial returns. Before that, Sandrine has served as CEO and board member in various companies and industries. We'll talk about that in a second, but some of them we know very well. Um, and she also served on the advisory boards of several women-led startup companies over the past several years, mostly in women's health and well-being. She served as the CEO of Orbix Medical, a medical device company based in Europe and Israel, was the CEO and board member of VLS Group, a European logistics service provider, CEO and board member of Contipi, an Israeli medical device startup, which she led from incubator stage to an exit, and as the general manager of the Strauss Group. For those of you who don't know, one of the probably most famous families in Israel, and actually, as some of you know, this our family office first conference ever was built with Raya Strauss's daughter that you've met, Sandrine, in Toronto, who's an expert in the family business world. And Sandrine started her career at Procter and Gamble in Geneva. So first of all, we spoke. I saw the names of your partners. We had a little talk about Sir Ronen Cohens. We deal a lot with ESG and everything with that. Obviously, the family office world cares about this space very much. Trammell Crow that founded EarthX is just one name that you also met. Sandrine was with us at our Texas events and Canadian events. So it's a big deal with families in general. And it was funny because just before we started here, I mentioned that we reached out to Sir Ronen Cohens to join our London conference in November, where Sherry Blair is speaking, and Israel, where Harry Bloomfield is speaking. Every Israeli heard about the Bloomfield Stadium, but nobody knows who Bloomfield are. Anyway, so good morning. And I wanted to, I read a little bit about your background that, you started in the corporate world at very serious firms. If you can share more about yourself, about what led you to be in the impact investing side of things.
Yes. So first of all, thanks Danny for hosting me today, and very very happy to be with you all. Um, I'll introduce myself. And try not to repeat what you said, Danny, but I start with my name always because it's a very strange name. It's because I was born in Paris and I'm married to a Dutchman. But I am Israeli and I grew up in Israel. I did 4 years as an officer in the Israeli Defense Forces, and then did my economics degree in university, followed by an MBA degree at INSEAD in Fontainebleau. And then I started a very long career in management. Indeed, I started as a brand manager in Procter and Gamble in Geneva after my MBA as a brand manager for many of the brands that you guys know, like Always Pringles, Pantene, Head and Shoulders, etc. And I was in Geneva for almost 6 years. And then I moved back to Israel, where I joined the Strauss Group as a general manager of one of the companies in the group. And I did that for 5 years. and then made a big change in my career to move to the startup world. And I led a women's health startup called Contipi. And since that time, indeed, my personal passion is to mentor Israeli female CEOs in the area of women's health, because it's a very tough area, and women CEOs need all the help that they can get. So that's a personal passion of mine, but I don't do it for money. It's my pro bono activity. I moved back to Europe, to the Netherlands, where I led a 400 people company in Germany, Belgium, and the Netherlands. After almost 20 years of working very hard as a CEO and general manager, I wanted to take a sabbatical. I was still in the Netherlands, and I decided to take a year off. And what happened is that after months, a friend of mine, who is today my partner, Gal Chayut, we are friends since INSEAD, since business school. He called me up and he said, Sandrine, have you ever heard about impact investments? And I told him, Gal, you know my background. I've been in management for 20 years and I'm not an investor. Tell me more. And he said, listen, this is the next big thing. I'm sending you some articles, and I'd like you to take a plane to London and meet a very special man called Sir Ronen Cohens. I worked with him in APAC for over 10 years. You have to hear him out. And I said, well, I've taken a sabbatical, but I'm going to hear him out. So, you know, from Amsterdam to London is a 1-hour flight. I took the flight. And frankly, then after meeting Sir Ronald, there's not much else you can do in life but dedicate yourself to impact investing. Because Sir Ronald really invented the field. He's so inspirational, and his vision is so captivating that I was convinced that that's what I want to do for the rest of my career. And I joined two partners who are very seasoned investors, and I complete them with my management and operational management background. And together we founded the leading impact investment fund in Israel in 2018. And we are very fortunate that Sir Ronald not only is our co-founder, but he's the head of our advisory board. I keep being inspired by his vision and his. I recommend all of you to read his latest book, Wall Street Journal bestseller called Impact. Just came out in Hebrew as well, but it's available in, I think, already 15 languages or so. And that's my story.
I will mention that Sir Roland Cohen is obviously a very known name in the world. And my friend Yossi Vardi has been telling me for ages, we have to get Sir Roland Cohen at some point. And I would mention, we invited him actually to speak in Israel, in London, as I've mentioned. In London, our speaker there, Steven Brenkenheimer, is, first of all, those of you who can check the family, it's one of the largest families in the world, but he is all about impact and ESG in all this world. So check it out. It's our London conference on November 22nd, which brings me to ask you, what's the difference really between impact and ESG? I mean, ESG is more environment, impact. I mean, you tell me how you see the difference.
The difference is very clear, actually. Every business, every company has an impact, okay? Negative impact, positive impact. Negative impact, we all know the examples. It can be pollution, it can be treating employees unfairly, it can be child labor or anything else. Positive impact is making the world better. So it's not black and white, it's a scale. And those of us who are in this space, we divide this scale to 3 levels. The most basic level, what you call ESG, is, let's think about it as ABC. The most basic level is A. It's avoiding harm. It's when companies try to minimize their negative impact. They're trying to pollute less. They're trying to include a diversified workforce. They're trying to make good decisions, good governance, make a social contribution to their communities. But that's the basic level. And most corporations in the world today, they have ESG reporting because they want to show that they are minimizing their negative impact on the environment and on the social communities. When you look at one level higher, you're not only trying to avoid harm, you're actually trying to do some good. And then we call it B, benefiting all stakeholders. When you're trying to take into account your employees, your suppliers, your customers, all the stakeholders in your company, of course, your shareholders, and you try to maximize the benefits for all of them. Impact investment is the most extreme, is C. And what is C? C is contributing to solution. Here, you're not only trying to minimize your negative impact on the environment or on people and the planet, you're trying to actively contribute to solution. You are trying to solve problems, not to only minimize your harm. And this is the most growing part of the financial world today. It's growing tremendously, double digits every year. More and more funds are allocated to providing solution to the world's biggest issues. And this is the difference between ESG and impact.
And an impact investment fund, I assume, invests in companies that meet those criteria.
Correct.
And so what is Bridges Israel?
So I think it will be, I'll share a very, very short presentation. I promise it will not take long, but it will be easier for me to explain. Bridges Israel is a fund that is promising its investors to deliver superior return through impact investments. We were, I see it doesn't move. Sorry, I'll do stop share. I'll do share again to another one. I think this will be better. Yes. So I think there is a consensus today that the two biggest issues of our generation are the planet crisis and the escalating social inequality. You can hear about it everywhere, and COVID made all of it worse. We can discuss it later. But there is a huge urgency to solve these two issues. Otherwise, the next generations, our children, our grandchildren, they will have a life that is not better than ours, but worse than ours. And we believe in Bridges that to invest in companies that actively solve one of those mega challenges or mega issues is a great opportunity to make money, to create economic value. Why? Because the businesses we invest in are the companies of the future. Those are the companies people will want to buy from, work for, invest in, and I can give you a lot of data why this is true. All of us who are following Larry Fink know that he said the next 1,000 unicorns will come from climate tech. We know that the Biden administrations and other governments around the world are mobilizing trillions of dollars to try and solve those two issues that we discussed, the social inequality, the rising social inequality, and the planet crisis. So if you are backing a company that has a good solution to one of those two problems, you are sure to back a company that will grow fast and will make a lot of money. We founded Bridges in 2018. This is the team here. We invest in Israeli technology companies to generate competitive financial return and significant measurable global social and environmental impact. We are a very experienced team. We are the largest impact investment fund in Israel. We have an international affiliation, and we are backed by institutional investors. A few words about the team. So Ron, my partner on the left, has a very extensive private equity experience. He was managing the biggest private equity fund at the time in Israel, a $500 million fund that was investing in Israeli companies, and has an MBA from New York Stern School of Business. Gal Hayut, my other partner, comes from the venture capital side of investing. So he worked with Ronen Cohens in Apex for more than 10 years, as I explained earlier, and he has an engineering degree from the Technion and an MBA from INSEAD, and I already gave my background. Two other people in the team that are worth mentioning are Renana, our head of impact, a global expert in measuring and reporting impact, and our investment director, Amit. When we raised our first fund, we had to work really hard to convince investors that to invest in sustainability and inclusiveness does not mean to compromise on your financial return. But today we have a lot of examples from our first fund to show that to be an impact investor in today's environment is a competitive advantage. An impact investor like us is able to generate a proprietary deal flow because we are able to detect and pursue opportunities that other funds are overlooking. And we have enough examples to show. We are able to win competitive deals when there is a competition. We know in the last couple of years where money was abundant and good deals, everybody wanted in. We had very clear examples why management teams and founders prefer us because of our impact mission and because of what we bring to the company. And once we invest the company, many times our impact focus helps the company unlock value, hidden value, to customers and to investors. This is the 12 companies in which we invested to date. Each one of our companies is making the world more inclusive or more sustainable. We invest in impact technology companies that can generate global returns. And sometimes we invest in non-technology companies that are SMEs that also give very, very strong impact. Some examples of the areas that can make the world more sustainable is areas such as agtech, food tech, climate tech, future of mobility. And areas that make the world more inclusive is mainly focusing on access to health and financial services. We are raising now our second fund, which will be double the size of the first fund and is aiming to close by the end of this year with the same strategy and market standard terms. And what we always say, 100% impact integrity. So that's a very, I hope not too long presentation of what Bridges is.
No, definitely not too long. What made you focus on technology and impact investment strategy? Why technology? And maybe while you're at it, why Israel?
Sure. So let's start with why technology. Technology is a huge enabler for impact investment. Many of the things we see today in startups were not possible 5 or 10 years ago, and that makes the impact they can generate tremendously bigger than previous solutions. So if through technology you can solve a sustainability issue on a global scale, that can generate tremendous revenues and tremendous economic value. And you cannot do that without technology. You can we can discuss examples later on, but technology is one of the biggest drivers behind the growth of the impact investment market. In addition, why Israel? Israel is known as the startup nation. Israel has the highest expense on R&D per capita in the world. It's over 4% investment in research and development, whereas the average of the OECD is less than 3%. Israel has the number of startups per capita that is the highest in the world, together with Taiwan. And by the way, in this measurement, the US is only number 4. So being Israeli and being located in the Israeli ecosystem gives us access to a huge number of startups that investors in Europe and the US are less close to, and therefore can increase the reach through investment in a fund like ours. In Israel today, there are something like 7,000 active startups, and we estimate that around 1,000 of those startups have the potential to create positive impact according to our criteria. And therefore, it's a very rich source of deals for us. So this is why technology, and this is why Israel.
And talk a little bit about the difference between social impact and the environmental impact with regards to technology solutions.
Sure. So let's start with environmental impact. So we said, and we all know that the planet crisis is very real. We are reaching the boundaries in terms of water, in terms of soil, in terms of temperature and climate, in terms of biodiversity on land and in the oceans, and other elements, all part of what we call the planet crisis. So technology can really address those issues in several sectors. For example, technology solutions in what we call agtech, agriculture technology, can address the issues concerning water usage, soil usage, to grow more in the same with the same resources of land, to increase the efficiency and to feed more people with the resources we have today or with less resources. And some examples there can be a drip irrigation system that is saving 50 or 60% of the water you need in terms of irrigation, and at the same time increases your crop by 15%. So it's a technological solution that can address a huge issue like water usage on a global scale. That's when we talk about environment in an agtech solution. Another solution to environmental issues can be the water resources, that water technology, things that can help us reuse sewage water, for example, or return the water to its origins so that we can use it more efficiently. We can talk about the future of mobility. There's a lot of innovation around, electrical cars, electrical solar panels, around energy usage, etc. And all those areas of technology are directly impacting the environmental crisis that we are experiencing. When we talk about social inequality, it's more complicated. We see that the social inequality is rising, and COVID made it worse because the difference between the top 20% and the bottom 80% of the social economic, let's say, division in the Western world, the top has gained much more and the bottom has lost much more. So the inequality was rising, and the technology can solve or can help solve the inequality issue, but by making, let's say, certain services more accessible. So healthcare, for example, is a very essential service, and obviously when you have less money, your access to good healthcare is limited, and technology can help that. So if you can provide a technological solution that can offer access to services at a fraction of previous cost, you are making accessible healthcare or good healthcare accessible to more people. So that's an example of how technology can make a solution or can help solve social inequality.
Before we go to some case studies, someone is asking a question that can be, what's the minimum ticket size? I'm not sure if the question is what's the minimum ticket size to invest with you as a investor, or what's the ticket size that you invest in other companies? So maybe you can answer both.
Sure. So first of all, I saw that someone is also asking, is this our first fund? No, our first fund was in 2018, so we are not a first-time fund. This is our second fund. And the minimum ticket size...
So maybe before you go to the second question, I know that the first fund was very impressive. Can you share with us how impressive it was and how much, what was the size of that fund?
Okay, so the first fund from 2018 was $80 million, 80, from which we invested in 12 companies, as I showed. And our IRR today is 20%. We are still very young. So still 4 out of the 12 companies that we invested in are still held at cost. So for those of you who understand what that means, it means that there is a significant upside still to the numbers that I'm just showing. And we expect that the first fund will return 3.5 to 4 times.
Wow.
Yes. And now we are raising a second fund, which will be almost double, $150 million, with the same strategy and the same return expectations. And we are accepting commitments of minimum $1 million. And I want to stress that this is a commitment. It doesn't mean that you have to invest immediately $1 million. It means that over the course of 4 or 5 years, you get a request for capital that is 10 to 15% per year of your total commitment. So if you, for example, commit $1 million, you can expect to invest between $150,000 to $200,000 a year in the fund. That's what we...
And what's your investment in companies? How much do you guys invest in different?
Okay, so in our first fund, which was a small fund.
When was the first fund again? When did you start the first one?
2018, 4 years ago. 4 years ago. So in the 12, so we invested in the first fund between $4 and $6 million per company over several years. We don't invest all at once. We usually start with $2 to $3 million investment, and then we do follow-on investments to continue to support the company. And we actually have also quite a lot of reserves to continue and support those 12 companies from the first fund. In the second fund, which will be a little bit bigger, we expect to invest $5 to $7 million per company, and sometimes more if we feel that that's the right decision to make.
All right, so back to a couple of my questions. Case studies.
Yes.
If you could give some case studies for a technology solution to social inequality.
Sure. So I'm going to talk about a company called TaylorMade, one of our 12 investments. You may know that in the US market, financial toxicity or personal bankruptcy due to healthcare costs is actually healthcare or an illness is the #1 reason for personal bankruptcies in the US. And to compound this personal problem, the hospitals and healthcare providers in the US have an uncollected debt of approximately $40 billion a year. So if you're a hospital and you perform an operation, you are sometimes able to collect the money from the insurance company, but not the self-participating part of the person that was treated. And that's an enormous problem, which is obviously impacting people who are less affluent. And today, in many health hospitals, you have what they call a financial aid consultant. So the hospital is trying to help you if you, God forbid, were diagnosed with cancer or with a very expensive illness. They are trying to help to finance your treatments according to the protocol that the doctor recommended. And today they're doing it manually. This company that we invested in was founded by two technology geniuses who were able to automate this process using AI, machine learning, and artificial intelligence. And they basically get a treatment protocol from you and some of your details, like where are you insured, what's your insurance program, and they are within seconds helping you optimize your financial situation so that you can get the treatment that the doctor recommended. So they are looking at corporate programs. They are looking at optimizing your insurance. They are looking at free drugs programs. They are looking at state health programs, etc. And they are giving you a plan. And we have been measuring the savings that patients have been experiencing with this system, and they can save between 60 and 90% of their cost, and that has an enormous impact on their well-being.
Planet crisis.
Yeah. So another example, we talked about the water crisis. So the UN predicts that 40% of the globe is going to be, or the population is going to be in water-stressed areas. We see the drought already in Arizona, in California, in Spain, in many areas of the world. We miss water. But today, 85% of our crops, are using flood irrigation to irrigate the crops. And flood irrigation is a very wasteful way of irrigating your crops. You're flooding the field and water is standing there, and 60 to 70% of the water is evaporated. Some of the crops are not growing because they are rotting, and it's a very inefficient method. Now, traditional drip irrigation was invented 50 years ago, but it's a very expensive system. You need pumps, you need water pressure, you need energy source, you need filterization, and that's why it has not penetrated the majority of the fields. Now, we invested in an Israeli company that invented drip irrigation without electricity, without any energy, only based on gravity, on the natural slope of the field that is being flooded. And so you put this drip irrigation in the field and you can save 60% of the water that you normally need, and you can save up to 70% of the fertilizers and chemicals that you normally need. And at the same time, your crops are growing 15% more than in your previous method. And how is this possible? Because you prevent this rotting and you give the plant more air and better water regime. So this has an enormous environmental benefit, not only in terms of the water and fertilizer being saved, but also in terms of less methane that is going into the air. And this company we invested in, the impact is so great that PepsiCo decided to adopt this technology and to apply it among tens of thousands of their potato growers around the world. And if you look at LinkedIn, you can see the CEO of PepsiCo proud of the cooperation that they have with NDRIP, and that's the company I was describing to solve environmental issues around the world.
Can you explain how you manage and report the impact of your portfolio?
Yes, so it's a crucial point because many people think they do impact, but if you don't report and you don't measure, then it's a nice claim, but it's like saying I'm profitable but not showing anybody your P&L, you know? So we report and measure impact the same way other companies report their financials. We are looking at 5 dimensions of impact: who is experiencing the impact, what impact is he experiencing, how deep is the impact, for how long, to how many people, or if it's environmental, the planet, and how unique is this solution compared to what is available in the market. And we track this impact per company every year. So let's take this company, NDRIP, that we talked about. We invested in the company in 2018, and you can see in our impact reporting what was their impact rating in 2019, what was their impact rating in 2020, and we just released our 2021 report, and it can be downloaded from our website, and anyone can read. It's a transparent report. We want everyone to look at the report and measure us compared to others. We are using the most common and most, let's say, regarded standard for impact reporting, which is the impact management platform. And this is adopted by the most impact investors in the world as the gold standard for impact reporting. Let me only add that there is a specialist, a European specialist, that is tracking more than 2,000 impact fund managers around the world, called Phoenix Capital, and they allowed us to quote them because they did a due diligence on our reporting, and they said that our reporting is considered the top 5% in terms of impact reporting. Top notch. You are muted, Danny.
sorry, last question, sorry.
Sure.
Future plans. What are your future plans for the fund, for what you have? Uh,
Great. So first of all, we love what we are doing, and we are doing it for 4 years now, and we have great success. Our first fund was too small. There were so many good solutions that we saw that we couldn't invest in because our fund was not big enough, and we want to continue and invest. And therefore, we are raising a second fund, $150 million. We already have some commitments from investors, from existing investors and new investors for the second fund. And this is my focus right now. I will be, by the way, in New York and Boston on the week of June 6th. And I'll be very happy to meet in person people from family offices that find this interesting and want to hear more. I will be also traveling to London and Europe in general to meet potential investors. And of course, today we have Zoom, so anyone from anywhere, Australia, New Zealand, North America, or Europe, or UAE, can contact me, and I'll be more than happy to jump on a Zoom and explain what we are doing and why we're so passionate about it. And as I said, we are our future plan is to raise a bigger fund, $150 million, invest in 16 other companies that will all make the world more sustainable or more inclusive, and that will help solve the two biggest challenges of our generation.
Sandrine, thank you very much. I want to remind everybody that this is recorded, so those who couldn't attend will, and those who could, will receive the link to the recording with Sandrine's contact information. And as I've mentioned, this is a major topic at our events. In London, one of the largest investors in the space will be talking about exactly this. Anything else you'd like to add at this point?
I just want to say that we are happy to talk more to anyone, and I'm especially excited about family offices because I know that the younger generations today are very passionate, and on one hand they're very concerned about the planet crisis and the inequality, and on the other hand they're very passionate about it. And I think today family offices also have more appetite for alternative investments, so venture capital and private equity solutions, and they're more willing to allocate more funds to these financial vehicles. And as I said, I'll end with a sentence from Ronald's vision. In the 19th century, we learned how to measure returns. In the 20th century, we learned how to measure risk, which is a very complicated thing to measure. And we learned about risk-adjusted returns. In the 21st century, we have to balance risk, return, and impact, because risk and return are no longer enough. So
thank you, Sandrine. Just a couple of words about our future. Next week, at the same time, I will be speaking with, on May 31st, I'll be speaking with Mark Eckler, who's, or Eschler, I should say, a serial entrepreneur, is one of our steering committee members in Chicago, and one of the most successful tech entrepreneurs in Chicago. Him and his partner for the book Exit Right will be joining us, Mert Hilmi Izeri, who's also a serial entrepreneur, and they have spoken to many successful entrepreneurs, from CEOs of huge companies to leaders of smaller companies, but all serial about how they made it, so, and how to exit right. So that's really the topic. Um, and we have loads of great online sessions coming up from the designer of the big Christmas red balls on in New York to lots of amazing people throughout the next month. In the summer, as you know, we take a time off, and after the summer, September 15th is our tech conference. This year is dedicated to blockchain and cryptocurrencies and what's going on there. And then November. So help us God, November. November 3rd is our annual conference in New York. November 8th is our annual conference in Chicago with Sam Zell, Zach Williams, the son of Robin Williams, and many others. And November 22nd is our conference in London, Sherry Blair, the Brankenheimer family, and many others there. And then later on in December, the fun month, we're in Art Basel in Miami, as we are every year. And we finish the year in the UAE for the first time in Abu Dhabi, in Dubai, on December 14th. And we even might do another very interesting resort-like conference. I will not share that yet. Sandrine, thank you very much. I hope to see you at our conferences as well. Sandrine just spoke at our Dallas, maybe Houston conference as well, Toronto and Montreal. I hope to see you in the future so people can meet you in person. Thank you. We'll send you all
Thank
the
you,
contact
Danny.
info and wishing you all a great week.
Thank you very
Thank
much.
you. Bye-bye.
I enjoyed being here.
Likewise. Thanks.